What's up, YouTube? Welcome back to another episode of KJ the Investor. This is yours truly, KJ, and without further ado, let's go ahead and hop into our portfolio. Now, I know a bunch of y'all probably wondering why I did not upload yesterday or 2 days ago. And the reason is because I wanted to stick around and look at the government, look at the news, look at the media, and so I could bring you back with clarity the most updated information that I could find. Now, listen. If you like me, your portfolio has been in the red. It's been in the slump. As a matter of fact, let me show you. Right now, we're up today, $362, but year to date, we're down about $4,000. That's 6% of my portfolio. And if you like me, like I said, you've been experiencing some red days. Overall, the whole total market has. So don't feel bad. Now, my buying power is $22.20, but that's because I've been putting my dollars to work. I'm still working actively on the job, and when I get my income in from that job, I put those dollars to work in the market. No problem at all. Now, one thing I want to show you guys that I started was a Doge account. I got Dogecoin right here, sitting at 16 cents per share or whatever. I dove in, I'm putting in like $200 into Doge. Right now in the quantity, I got 1,023.69 quantities of Doge. That's a negative right now because I bought it earlier when it was at like 19 cents. Right now it's trading at 16 cents. After the articles and the mandates I read about Dogecoin, y'all, I think this thing is set to explode. And I think it could have upwards of a 2,700% increase on Dogecoin. Articles down below in the Robinhood app about Doge. You guys should check them out if you get a chance to. Now, you also know I got a Bitcoin position. I put $200 in the debt the last time. Also, I still got my Ethereum and Avalanche. So my crypto wallet, my crypto position, guys, is starting to grow. It's opening up more and more. I know a lot of you guys should be excited about that. Seeing that, as long as you've been following KJ the Investor, I've not been a big fan about cryptocurrencies. I never will put more than probably, sorry about that, guys. I never probably put more than 10% of my portfolio into crypto. All these notifications trying to come up. Sorry, y'all. Anyway, let's go on down. Look into the stocks and to the ETFs. Like I said, lately it's been a lot of red days. But listen, it's the mindset that you got to have. Don't worry about that. I always told you when you follow this channel, I always tell you, you build wealth in the red days, you collect the wealth in the green days. And that goes for what we're going through right now. Back in 2020, the pandemic happened. We had the stock market crash. What happened? People started buying. After they panicked, they sold. But 2021, the market was an up year. Then you had 2022, we had another market crash. And what happened after that? 2023 and 2024 was two of the best years of the stock market. Everything, I'm talking about, we had the S&P had back-to-back over 20% returns in the S&P. So 2025, we got a new administration, and we set to have some downturn. Why? Because if you think about it, the top 1% of this country, you got the top 1% control 90% of the wealth, and then you got the bottom 90% of the people controlling only 10% of the wealth. So that's kind of what we're looking at. They was like, you know what? We had 2023, 2024, back-to-back years, over 20-something%, like 22, 23% return combined returns in the S&P. We need a way to make money, and we need to make it easier because it's going to be harder for us to make this kind of good money while the prices are already high. So what does 47 do? 47 listens to his buddies. He comes in, introduces tariff talk to the market, scares investors. When that happens, you already know uncertainties in the mix. When uncertainties in the mix, the market sells off. Now we have a man-made crash, and that's exactly what I think it is, guys. I believe, like I say, I took some time out. Instead of just putting out videos the last 2 days, I took some time out to study and read up on what was going on. And y'all, I have come to the conclusion that this is a man-made crash on purpose. 47 is doing what 47 does best, and that's cause chaos. And he's going to cause it. But you can be on the good side of this, or you can be on the receiving side of this. I choose to be on the good side of it, and I hope you do too. What does that mean? That means I'm going to stick to my strategy, buying big boy blue chip paper assets long term. While prices are low, my S&P 500 ETF is low, SPLG, I'm buying. As long as my FTEC, Informational Technology Index fund is low, I'm buying. Any other Magnificent Seven stock is low, and I believe in it, I'm buying. And that's what I'm going to do. I can't tell you what to do. I don't have a Series 6 or a Series 7, so I'm not a financial advisor, but I am telling you strictly what I'm going to do. I'm not an expert, so I can't tell you what to do, but I'm an expert in my own opinion, and my opinion tells me that I need to buy in the red, collect in the green. You build wealth in the red, you collect wealth in the green. If you remember to live off those principles, man, you will be fine in the stock market. And I got a 10-year, 15-year, 20-year outlook on the stock market. I'm not looking to cash out tomorrow. I'm not looking to cash out next week. So guess what? If it want to stay red for longer, that's fine. It can do just that. I'm okay. But like I said, I got a feeling Dogecoin is what they're working on. I got a feeling that's something that is going to take off. It has the tendency of explosion. That's what experts say. You know, going off what the experts say on that. I don't know. All I know is I'm just buying it and getting more exposure into some cryptos that I know is true to they're set to take off. Now, let's talk about your Federal Reserve. Your Federal Reserve Chairman Jerome Powell. Him and Trump are like, I don't say his name. Him and 47 are like two peas in a pod, but they total opposites at the same time. Jerome Powell, the federal chairman, and then 47 is the president. You got these two going at a financial war. And what 47 has already asked Powell them, he asked them to lower short-term interest rates. When short-term interest rates are lowered, asset prices go high. What that means, anything in the asset class, you got real estate is an asset, you got businesses is an asset, and you got the stock market is an asset. All three. And now the fourth and found asset class, Bitcoin, crypto, that kind of stuff. Those are the assets, right? So, also, you got gold and U.S. Treasury bonds and you got all this other stuff. Yeah, but I'm just talking about the asset classes that I'm using to get the wealth, which are the traditional asset classes. Now, anyway, he's 47 has put the pressure on Powell. He's said it before to him. He's asked him before. Now he's told him, and Powell still refused to drop short-term interest rates. Why? The Federal Reserve refused to drop it. Why? Because of inflation. The Federal Reserve has a mandate to make sure inflation hovers around 2%. Every year, they say that the U.S. economy is growing at a good pace if inflation grows 2% every year. But the problem with that is we've exceeded that 2% way long time ago, back in 2020, when the U.S. printed out all these stimulus checks. When the government issued all these stimulus checks and put all this money out here in circulation, it caused inflation to grow. And that means prices of goods and services went higher because everybody had all this extra money. So now when inflation kicks in like that, that means the U.S. dollar is no longer as valuable as it was. What is Trump trying to do? Don't say his name again. What is 47 trying to do? 47 is trying to bring back value to the dollar. Now, I'm not saying he's going to be successful. This man's only in office 4 years. But what I'm trying to tell you is he's made a man-made crises, so-called crises, and I'm doing my fingers in air quotation marks. He's got these tariffs out here, terror talking, and pretending that we finna put tariffs on these other countries' goods and services. That man knows that's not what the world needs. The other economies in the other countries are suffering. American economy is suffering. And he even came out on Fox News on Sunday when the reporter asked him what is his mindset or the state of the economy. What did he think about it? He said that the economy, and I quote, he said that the economy is going through a transition. Yeah, AKA towards a depression. That's what a recession. I'm sorry. Now that's what that means. Now, how did we get from just 2 months ago, 3 months ago? We were just at all-time highs. I told you, year 2023, 2024, both of those years were at all-time highs in the stock market. How did we go from there to this so fast. Well, it was the changing of the administration. That's what it was. And then every time you got somebody like 47 who want to be the change that you can see, he's going to do stuff like this in order to make his stamp mark of approval on the economy and on the world. It's basically he gets in here, gets in a point of power, and stirs up mischief and chaos. So he's doing it on purpose in order to drive the market out of control. Now, enough of that. Let me get back to these investments and stocks. So what's happening is now the pressure is on the Federal Reserve. The pressure is on them to now drop interest rates. If they do not drop interest rates, if they don't drop it, they're trying to, because they're trying to control inflation. But that's not what 47 is looking at. 47 is looking at, I want you to drop short-term interest rate because all our assets can go up higher. 47 is rich. All his friends are rich. They're in this environment together. Do you not know where the rich people keep their money? They keep it in the stock market. They keep it in real estate. They keep it in businesses. That's where they keep their money. They don't keep their money in banks like regular people. I don't keep my money in banks, but they don't keep their money in banks. I mean, I'm being real. These people put their money in stocks market, the businesses, and real estate. And he wants the value of those asset classes to go up, just like all these other millionaires and billionaires too. But what's keeping it from going up and soaring is federal chair Jerome Powell will not drop short-term interest rates. So they're putting pressure, 47 and his buddies are putting pressure on Jerome Powell and the Federal Reserve to drop interest rates by crashing the economy with tariffs. Tariffs is the weapon of choice to crash and wreak havoc on the American economy. And now when you have a negative GDP like we're experiencing for January, February, March, when you have negative GDP, now that means that the economy is no longer growing. And if the economy is not growing, that means it's contracting. Now that if the economy is contracting, we have a negative growth. Now the Federal Reserve and certain members of the Federal Reserve are coming out on record and saying, well, if things are going to continue going this way, we're not opposed to dropping short-term interest rates. Yeah, I bet you not. Yeah, that's exactly what 47 wants you to say. He wants you to feel the tightening. That's why they're going through with Doge and Elon Musk. That's why 47 put Elon on the prowl, because they're going through the Federal Reserve. They're going through the federal government, tightening up on all the budgets. That's why the people getting laid off. They're getting rid of these man-made jobs, the jobs that were just made out of thin air. They're getting rid of all these other positions that's not needed because they are tightening up on the money being spent out here, because that's what businesses do. Not just them. You got other corporate businesses. You know, our jobs report said in February, we added an extra 150,000 jobs to the economy. That was just in February. Jobs report said we added 150,000 jobs. That ain't what 47 want to see. 47 want that number to be split in half. 47 be satisfied if that thing said we only added 75,000 jobs to the economy. Now you're hurting. You see what I'm saying? Now you're hurting. And that's what 47 want to see, because the Federal Reserve won't drop short-term interest rates unless they can have a case to, and this is going to be their case. Because money's not circulating. How you know money's not circulating? In America, people not getting jobs, people not getting getting paid, but the people that getting paid, they're holding on to their money. They're not spending it on in the stores and restaurants as much as they were. How do you know? Because we have a negative GDP. We have a negative gross domestic product. We have a negative GDP. So now we're at a point where we're at a crossroads where the Federal Reserve have to come up with a way to drop short-term interest rates, but also keep a monitor on the inflation. If inflation continues to be sticky and continues to be stubborn, then they're going to want to hold rates higher for longer. And if rates are held higher for longer, 47 is going to continue with his pressure or with these tariffs. And who knows the next step this man going to do? He's going to probably push it to the limit with something else. And that's what's going on in the economy right now. That's what's going on with your stock market. You guys, the stock market is the largest asset class in the world. I thought it would have been real estate, but when I researched, it's not. The stock market holds over $55 trillion worth of assets. And the real estate market, I'm talking about real estate in the whole entire world, the entire planet, land in the entire planet, and the buildings that are on that land is only worth about 53 trillion. Between 52 and 53 trillion. I say only worth, but what I'm saying in comparison to the stock market, 52 to 53 trillion. But the stock market holds $55 trillion. So that's the largest asset class in the world. It's in the stock market. And you think 47 is going to be responsible for crashing that? They're not going to let him. And no, he don't want to be responsible for crashing it. That's how I know this is a short-term play. This is a short-term play. So what should you be doing? Well, I'm not going to tell you what you should do. I'm going to tell you what I should do. Y'all not going to get me to monetize with with YouTube. I'm going to tell you what I'm going to do. What I'm going to do, I'm going to continue to buy big boy blue chip paper assets, my favorite ETFs, my favorite stock, and hold them long term like I've always said to do. I'm going to continue to build my wealth the way I know to build it. I'm going to continue to put money into some of these cryptos that I believe in. And I'm going to continue to buy big boy paper assets, big boy blue chip. That's my plan. Now, if you rock with me, my people know you rock with me, you can do that too. And you can have the same result we're going to have. If y'all know Tom Lee, you heard of Tom Lee, right? The famous investor. He's the leader and co-leader of is it BlackRock or something like that? Tom Lee, y'all know who I'm talking about. This cat came out on TV and said he can see in the next couple of months the market making a 10 to 15% increase in the market. Who doesn't want to be a part of that? A 10 to 15% increase in all stocks in the market? Man, he said he can see the S&P going over 6,000 points before the end of the year. Right now, we're somewhere, if we keep dropping like we're dropping, we'll be in the 5,000 point range soon. Because earlier we was at the 5,700 points. Because last year in 2024, December, we had reached that 6,000 point range. But now we're under 5,500 points in the S&P. He said he can see it going back over 6,000. So all I'm telling you is the tariffs are the weapon of choice. 47 putting the pressure on the Federal Reserve. Federal Reserve got a decision to make, and short-term interest rates looks like it's got to be dropped. Now, when that happens, there will be a rally, a bull market will ensue, and investors are going to want to put their money back into these companies that they've sold out of. They're going to want to put their money, all them millions and billions of dollars are going to flood back into the market. And when it does, people like me who took advantage of the dip, who bought the dip, people like me who wasn't scared and kept money on the